Most people think taxes are way more complicated than they actually are. In reality, the IRS uses a simple formula to figure out what you owe. And once you understand it, you'll see exactly how deductions and credits fit in and where you can save the most. So step one, we have gross income. We start at the top with gross income. This is all the money you earn in a year. It could be salary, self-employment income, interest, dividends, rental income, you name it. If it's income, it goes here. Now step two, adjustments, specifically above the line deductions. Next, we subtract what's called adjustments to income. So these are going to be things like contributions to traditional IRAs, student loan interest, or self-employed health insurance premiums, and much more. Once we take out those adjustments, we get what's called adjusted gross income, also known as AGI. This number is super important because so many other tax calculations are based on it. Now below the AGI, we have step number 3. So this is the standard or itemized deductions. So from AGI, we subtract either the standard deduction or the itemized deductions, whichever is larger. For most people, the standard deduction is the way to go. But if you have a lot of deductible expenses, such as mortgage interest, charitable giving, medical bills, itemizing might make more sense. So once we subtract this step, we finally land on taxable income. So this is step number 4, tax rates and tax brackets. Now we apply the IRS tax brackets to your taxable income. This is where progressive taxation comes into play. Not all of your income is taxed at the same rate, just the portion that falls into each bracket. Step number 5, we have tax credits and other adjustments. Finally, we subtract any tax credits you qualify for. So these could be the child tax credit, education credits, and many more. Credits are powerful because they reduce your tax bill dollar for dollar and not just your taxable income. So that's the formula in a nutshell. Gross income, then adjustments, then AGI, then below the line deductions, then taxable income, and finally tax credits. Once you understand this flow, you'll see where strategies like retirement contributions, health insurance planning, or charitable giving can really move the needle. It's not just about tricking the IRS, it's about knowing the formula and how it works and putting yourself in the best possible position.